What's driving markets? Welcome to Market Take. Each week, we'll bring you our insights on the latest market and economic trends that are impacting investments. I'm your host, Nicholas Fawcett, Senior Economist at the BlackRock Investment Institute, and this week, we share why the Fed's room to ease keeps us risk on. Our pro-risk stance hinges on more signs that a cooling labour market paves the way for more rate cuts. But the US government shutdown means a critical sign, September non-farm payrolls data, is delayed. The proxies policymakers have used instead point to a softer labour market. US job growth has slowed significantly this year. That's likely due to softer growth as companies and households navigated the imposition of tariffs, and the US administration announced federal job cuts. Labour supply has weakened too. Projections of net immigration this year dropped from 2 million in January to just 400,000 today. Yet, we aren't seeing significant job losses, and the unemployment rate remains low by historical standards, a kind of no hiring, no firing stasis. These labour market dynamics let the Fed cut rates in September and signal that more cuts were ahead. But the government shutdown clouds the picture. Without payrolls data to give them a clear picture of the labour market, policymakers and investors have had to make do with proxy sources. These sources all point to a soft labour market, and markets are still pricing in 2 further quarter-point cuts this year. We agree, provided the labour market keeps slowing, but we don't think it will slow enough to warrant the more than 100 basis points of rate cuts that markets have priced in by the end of 2026. The September cut and the anticipated cuts later this year support our overweight to US equities and the AI theme. This environment also creates an opportunity for investors to lock in higher yields, in line with our tactical neutral stance on long-term treasuries. Here's our market take. We stay overweight US stocks, provided resilient activity and a cooling labour market give the Fed scope to ease further. We stay neutral US treasuries. For details, read our weekly market commentary. Go to www.blackrock.com/weekly-commentary. Thank you for tuning in. If you've enjoyed this episode, subscribe to Market Take wherever you get your podcasts.
Is intended for informational purposes only and does not constitute investment advice, a recommendation, or an offer or solicitation to purchase or sell any securities, funds, or strategies to any person in any jurisdiction in which an offer, solicitation, purchase, or sale would be unlawful under the securities laws of such jurisdiction. The opinions expressed are as of the date of publication and are subject to change without notice. Reliance upon information in this material is at the sole discretion of the listener. Investing involves risks. BlackRock does and may seek to do business with companies covered in this podcast. As a result, listeners should be aware that the firm may have a conflict of interest that could affect the objectivity of this podcast. For more information, visit blackrock.com/thebid.